Have you ever wondered why countries around the world keep US dollars in their national reserves or central banks to secure their economies and conduct international trade? Or why oil, gold, or other important commodities are bought and sold precisely for dollars and not for other currencies such as the euro or yen? The answer to these questions lies in the concept of a reserve currency. It is a term that is of great importance to the functioning of the global economy, but is not always well understood. We will explain what a reserve currency is and why the US dollar has taken this place on the world financial stage. We will also learn about the benefits of countries having a reserve currency and how it came to be the dollar and not other currencies that gained dominance after World War II. What is an international reserve currency? So let's start by answering the question of what is an international reserve currency and why does it play such an important role? To explain this, let's use a simple example. Imagine that you are selling fruit in the market and each customer brings coins and bills from different countries. You would have a hard time counting their value, right? But if everyone paid you in dollars, no matter where they came from, it would be easy and convenient. Now think on a larger scale. In international trade, when countries trade with each other and buy and sell goods, such as oil, electronics, or food, they have to use a currency that is universally accepted by all parties. So how do you establish a common way to pay when each currency has a different value? What is needed is a currency that everyone recognizes as safe and stable, one that every country wants to have and that everyone trusts. And that is why there is a concept such as a reserve currency. Most often, a world currency is one that is used for international trade and accumulated in reserves by central banks. An example of such a currency is the US dollar. Most commodities, such as oil and gold, are bought and sold for dollars, because it is a stable and widely accepted currency by most countries. So what characteristics does a reserve currency have? Stability. The world currency provides stability in international trade because its value does not change rapidly. Confidence. Currencies such as the US dollar are recognized around the world, so countries, companies, and banks readily accept them. Ease of exchange. With one dominant currency, there is no need to convert money from one currency to another every time there is trade between countries. The reserve currency thus acts as a universal means of payment that helps countries and companies from different corners of the world trade with each other simply and safely. Currently, the US dollar performs this function, but as history shows, on average, the hegemony of a currency lasts 100 years. The record holder was the Spanish real, which remained the reserve currency for more than 150 years. History of the world's reserve currencies. Over the past 800 years, we have had as many as 8 currencies that have ruled the world. It is worth mentioning the history of at least a few of them, and also tell which was the first in the world. At the very beginning, when there was no money yet, people traded goods among themselves. Something for something, a farmer could exchange the goods he grew for what he needed. For example, fish. But such trade was inconvenient, because not always one party wanted what the other had. That's why people began to use precious metals, such as gold or silver, as a means of payment when trading. Gold became especially important because everyone valued it. It's out in Europe, Asia, Africa, everywhere. So we can say that gold was the first reserve currency. During the Roman Empire, one of the most important currencies in the world was the denarius. It was a silver coin used from about 211 BC and remained in circulation for nearly 400 years. The Roman denarius was widely used in Europe, North Africa, and the Middle East. Another interesting moment in history is when Spain became a powerful empire. In the 16th and 17th centuries, the Spanish discovered vast deposits of silver in South America. From this silver, they minted coins called real de ocho, which were used all over the world, from Europe, Asia, North America, and also Africa. The Spanish real de ocho is considered the ancestor of the modern US dollar and other currencies based on the decimal system. Although it was not a Spanish-dominated monetary system in the way the US dollar is today, it was nevertheless very important in global trade for several centuries. The British pound sterling has been in circulation since the 8th century and is still in use today, making it one of the oldest continuously used currencies in the world. Over the years, the world changed, and in the 18th and 19th centuries, Britain became an economic and military power. During this time, the pound gained global importance, becoming the dominant currency. British colonies, from America to India, used the pound in trade, which emphasized its strength. The pound's period of dominance lasted from 1815 to about 1940. We have already moved on to the current reserve currency, which is the US dollar. The change of currency took place just before the end of World War II as a result of a significant weakening of the economy of Great Britain, and therefore the previous country whose currency ruled the world. At the time, the United States was already the most powerful country economically and militarily, and had the largest gold reserves in the world, calculated at about 60%. US dollar as the world's main currency. After World War II, the US dollar began to play a huge role in the world, becoming the main reserve currency. But how did it happen that it was the dollar and not another currency that gained such a position? The answer lies in several key events and decisions that allowed the US currency to grow in strength. A key moment in the history of the dollar was the Bretton Woods Agreement, concluded in 1944, just before the end of World War II. As the world economy began to recover from the war, countries needed a stable financial system. At the Bretton Woods Conference, it was agreed that the US dollar would be pegged to gold, and 1 ounce could be purchased for $35, with other currencies based on the dollar. This meant that the dollar became very valuable because everyone knew that gold could be exchanged for it. Another reason was the decision to introduce the Marshall Plan to rebuild Europe after World War II. The US government allocated billions of dollars to help European countries, which not only strengthened the US position as a global leader, but also made the dollar even more common in Europe. These countries not only benefited from US aid, but also began to trade among themselves using dollars. Central banks around the world hold dollars in their reserves to protect their economies from exchange rate fluctuations and economic crises. The dollar acted as a safe haven because countries knew they could exchange dollars for other currencies or use them to stabilize their own currencies. With this role, the dollar has further strengthened its position in financial markets. Countries hold dollars in reserves to make sure their economies are protected from sudden changes in the value of other currencies. As a result, the dollar has become a key element in the stability of global finance. Another step that strengthened the position of the dollar was to link it to the oil trade. In the 1970s, the US and the Persian Gulf countries, which had huge oil deposits, agreed that oil would only be sold worldwide for dollars. This was crucial because oil is a commodity that everyone from the US to Europe to Asia needs. As a result, any country that wanted to buy oil had to have dollars. The US dollar has played a key role in the development of financial markets around the world. As a reserve currency and the most important currency in international trade, the dollar has become the foundation of global transactions and investments. One of the key elements in the development of dollar-based financial markets is the dollar-denominated bond market. Bonds are long-term securities that governments and companies issue to borrow money from investors. Due to the dollar's dominance in the global economy, many countries and companies have begun issuing bonds in dollars rather than in their local currencies. Imagine Canada needs money to build infrastructure. Instead of issuing bonds in Canadian dollars, which would not be as popular internationally, Canada could issue bonds in dollars. This would make investors from around the world more likely to buy these bonds because they have confidence in the dollar. For countries and companies, this means more access to capital and better financing conditions. One of the most important places in the world where the dollar plays a key role is the New York Stock Exchange, NYSE. It is the largest stock exchange in the world, where stocks, bonds, and other financial instruments are traded daily. Investors from all over the world, whether they are banks, pension funds, or individual investors, invest on this exchange using dollars. The New York Stock Exchange became a symbol of global finance and the dollar was the currency that made this development possible. Investors from Japan, Europe, or South America could invest in U.S. stocks and bonds without hindrance because they all used the same widely accepted currency. The most important element that strengthened the dollar was confidence in the U.S. economy. People around the world believed that the dollar was stable, that the U.S. was a country that was safe and strong. Investors were eager to buy U.S. bonds, and the central banks of other countries kept dollars in their reserves because they knew that the dollar would always be worth its weight in gold. In the 1990s, after the collapse of the Soviet Union, the U.S. dollar achieved even greater dominance. At the time, the United States was the only superpower, and its economy was booming thanks to technological innovations such as the development of the Internet. During this time, American companies like Microsoft, Google, and Apple began to conquer the world, further strengthening the dollar's position. Countries around the world were investing in American companies, buying American goods, and the dollar was on everyone's lips. A reserve currency is a key component of the global financial system that allows countries to safely store the value of their reserves and conduct international transactions. The US dollar has earned this position not only through the strength of the US economy, but also through political stability, investor confidence, and historical events. However, like any system, the dollar's position is not unshakable. The rise of other economies, such as China, as well as the emergence of new financial technologies, such as cryptocurrencies, could threaten the dollar's dominance in the future. Nevertheless, for now, the dollar remains the foundation of the global economy. Why has the dollar become the reserve currency? The answer lies in economic strength, confidence, and the role of the US as a global leader. Will this position last forever? We will try to answer this question in the next video.